Hi guys, my name is Harry Yotis. I've been a professional trader for 20 years now. I started my career way back in 2005 working for National Bank, one of the big six banks here in Canada. And for the past 10 years, I've been trading my own account. So, in today's video, I thought I'd make this video for you guys so that you can see how a truly successful trade materializes, how it germinates, how it starts, really the genesis of a successful trade. And in this example, I decided to use gold because it's a significant portion of my portfolio, and it's been the most successful trade in 2025. Okay, so the gold trade. Okay, this is a chart, of course, of gold, and we are right now December 19th was the final day of this chart. Okay, I am expecting a gold breakout. However, let's talk about what makes a successful trade. Okay, as you well know, maybe you don't, but I've been pounding the table on saying that trading is not a technical enterprise. It's really fundamentally based. The number one principle of successful trades, which includes the gold trade, includes the AI trade, includes everything, is that trading equals fundamentals are greater than the technicals. Okay, notice I said trading, okay, not investing. In investing, fundamentals are everything. Okay, investors don't care about technicals, they expect their investment to play out over 10 years. Okay, but even in trading, the fundamentals take priority, huge priority. I'd say at least 80% is fundamentals, 20% technicals, like the Pareto principle, the 80-20. Most of what makes a successful trade are the underlying fundamentals. The technicals are just used by us as traders to time the perfect entry. Okay, because if we were just investors and we just looked at fundamentals, the market could go down 40%, our investment could go down 40% before we realize some kind of profit, and it could take 3, 4, 5 years. I mean, that's what happened when the market started crashing in 2008. I mean, in October of 2008, fundamentally, like, you could have bought companies that were very, very cheap. However, for the next 6 months, the market fell another 40%. So I'm not just pulling an example out of my butt. This is exactly what happens in reality. And by the way, it took another 3 years for the market to make back all the losses that it was at, the levels that it was at in 2008 of October. So investors can tie up their money for a long time before they see a return. And for us as traders, if we do that, we're dead. However, if we as traders looked at fundamentals first, we would not have gotten into the market in October of 2008 because the technicals, the second part, didn't fit our criteria, even though the fundamentals were great. So just to make a point here is that technicals are not useless. I don't want to say that. I say they're important. However, the vast majority of the importance in a trade even is fundamentals, because fundamentals drive markets over time. It's not the technicals. You can have price action that keeps fooling you. Okay, everybody knows the chart patterns. Okay, everybody knows, everybody sees them. Okay, it's not a new thing, and usually a lot of big money uses chart patterns to fool traders into getting into trades and then shaking them out. Okay, that is literally a strategy of these traders and funds. However, let's go back to the gold trade, and what makes a successful trade is the fundamental. Okay, now why is this important? Let's go all the way back for gold, because let's go all the way back to here. This is August of 2020, during the pandemic. Okay, we had gold. Go a little brief history. Gold ripped during the pandemic. It went all the way to $2,000 something an ounce. Let's say $2,000 an ounce. And then for years, okay, up until here, March of 2024, right here, we had the real breakout in gold. Okay, so why did gold go up in the pandemic, and why didn't it continue to go up? Okay, well, because they printed a lot of money. Okay, gold went up with everything else because they printed all the money and they gave it to retail. They didn't give it to the banks. So it wasn't QE. It was outright money printing into the hands of consumers. So all assets went up, including gold. And people were afraid that there was going to be inflation. Okay, so yes, there was inflation later on, and gold usually does well in inflation. That's what the pundits say. That's what all the gold gurus say. But what happened? It just stayed idle. It even went all the way down to like 1600. You can see it from 2000 all the way down to 1600 in 2022 during that bear market. So it actually lost as inflation was going up. Why? Because all of these quote unquote sayings about gold that it's an inflation hedge, whatever, no, it's not necessarily true. In fact, gold does very well during deflationary periods. Okay, so forget all these like mantras that you heard about the gold market and just stick to fundamentals. Okay, why didn't gold and following gold miners, the people that produce gold, why didn't it continue to go up? Well, because inflation went up, and for the miners, inflation went up for their costs as well. So even though the price of gold went to $2,000 an ounce, their expenses went up too. So their margins actually shrank. So if you look at GDX during this time, which, I mean, we could, if we go all the way back to here, okay, this is 2020 spike. It went all the way down. Nothing happened, okay? Because the miners were actually losing money during this 2020 pandemic highs. Well, let's go back here so everybody can see. Okay, this is how everybody can see everything. So that's why gold did nothing for a long time. Okay, so we saw gold going sideways from 20, 21, 22. We had that bear market. Gold fell with the market. Okay, doesn't mean that because the market is going down that gold will go up. It won't catch a bid. No, another myth busted. Okay, gold will go down too in a bear market. It'll get sold out. That's why it gets sold to raise money as everything else is falling. Only the dollar went up. Okay, so the key to the gold trade, okay, starts right here. Okay, the Russian-Ukraine war. Forget everything you've been taught. All the gold gurus are touting everything that, oh, I was always right. I was like Peter Schiffs of the world. They say we're always right. Gold is at $4,000 an ounce, therefore we were right. No, you weren't. You were wrong, because the reasons that you were saying that gold was going to go through the roof was because of profligate government spending, huge deficits, huge debt, and the debasement of the dollar. All that was happening for a long time, and gold tanked. Okay, the real reason it's going up is there's a fundamental change in the gold market and in the world. That's what drives markets, fundamentals, okay? And it started with the Russian-Ukraine war in February of 2023. Gold didn't notice it at first. It still stayed sideways, a little pop, but still stayed underneath that $2,000 level, okay? And the reason why the fundamental change happened is because as the Ukraine war was going on, America and, the West, the EU and America, froze Putin's US dollar assets. That freaked out Putin, freaked out everybody in Putin's circle, and especially the BRICS countries. Okay, you heard of the BRICS? Brazil, Russia, India, China, especially China, which is friends with Russia. Okay, they're friendly. They're like in a global economic war with the West. Okay, China and Russia are, that is, not all the BRICS countries. Okay, so you had for 1 year here. Look, gold broke out literally March of 2024, right here. And that's when real fundamental change happened in global markets. The new world order emerged here. Because America was bullying the world, everybody else, by freezing US dollar assets, using the US dollar, using the SWIFT payment system as a cudgel, smacking the entire world with it, bullying the entire world to get them to do what they want, to get them to do what the US policy is at the time. Putin, and certainly Xi in China, didn't like this. So it took a year for them to concoct their plan to start buying gold, to come up with some kind of currency, if you will, or alternative method of payment to go against the US dollar and the SWIFT system, which is a global money transfer system, which is extremely archaic. And everybody knows in the entire world that nobody trusts the ruble, nobody trusts the yuan, nobody trusts the Brazilian real, nobody trusts the Indian rupee, but everybody, quote unquote, trusts the US dollar. That's why the US dollar serves as a US reserve currency and why the SWIFT payment system is so popular. But because it's being used as a cudgel by the West, the East, if you will, or the BRICS, had to find an alternative way to attack the dollar or to like lure people away from the dollar because they don't want the US to freeze their US dollar assets again. Okay, so because of that fact, the BRICS started buying heavily into gold to sort of come up with the only thing that will counter gold, counter the US dollar is gold. That for centuries, millennia, gold has been a store of value and a currency, and everything that is quote unquote perfect money is embodied in gold. Not so in the US dollar. The US dollar is near perfect, let's say, as if you can consider a fiat currency perfect money, but whatever. That's another debate. The point is that now, especially China and Russia, were buying heavily into gold to diversify away from the US dollar. And it took a year. Look, this happened in February of 2023, the Ukraine war. The Fed, another positive development was that the Fed pivoted to rate cuts in December 2023, okay, which is right here. But look, it took months because this was December. The Fed pivot was in December 2023, but the breakout in gold was in March 2024, literally like 3-4 months later, right? So it wasn't really the Fed pivot that did it. It was more, which helped, but this sustained move higher. It's not a Fed pivot. This is because the Fed pivoted before and gold never broke, always stayed within $1,000 to the $2,000 range. This is central foreign banks buying heavy, especially China. So this was the real breakout in gold, March 2024, okay, which is when I went heavy into the space. Why? Because the fundamentals changed. Yes, look, we had a technical breakout. Look, we also had a technical breakout here that didn't pan out. But this was real. Eventually, the fundamentals pan out. And as a trader, you want to have the fundamentals on your side. Look, it happened in 2024. I was long gold in 2024 and 2025. But as you will see, I was long gold, but also long gold miners. Okay? But this is just to show you that the fundamentals, once they're on your side, are on your side for years. Okay? Years. Literally 2 years now. And it will continue because you have to ask yourself as a trader, this is where you make a crap load of money. A trend that is fundamental, that lasts for years and is unchanging. Why am I not out of the space? Because the fundamentals haven't changed. I'm still in the gold trade. I think it goes higher. Okay? However, notice the frustration. Notice the timeline. Years, months, weeks. It's not just, we're not going for day trading money here. We're going for big money, okay? These kinds of fundamental changes in the new world order and the monetary system have profound effects that can change a 5-figure account into a 6-figure account, a 6-figure account into a 7-figure account, a 7-figure account to an 8-9-figure account. These are the kinds of trades, quote unquote, that work forever. And this is where you buy pullbacks, okay? This is why the technicals work when the fundamentals are on your side. Okay, so we have a fundamental change in the price of gold. Okay, that is going to be everlasting for a long, not everlasting, but it's going to last for a long time. And that's what you want as a trader. You see, trading is not just for 1 or 2 days or a week. It lasts years. The best trades last years, and you want to be in the space. Now, having said that, doesn't mean this is free money, because this is what happened in the gold space. The gold broke out in 2024, March of 2024, and sustained higher forever. If you're in gold, it's great. Okay, but if you want to multiply your money, you want to be in miners. Okay, so let's go to GDX. What happened in GDX? Okay, let's go to the weekly chart. You'll see it clear. Okay, this is the weekly chart of the miners. Okay. I try to superimpose what happened with gold here. Okay, this was the COVID peak in the miners, which was in August 2020, which has happened to be the peak of gold as well. Okay, if you recall in the previous slide, you'll see in gold, this was the COVID peak, and then gold hit it a couple of times. But the miners, look at the miners, all the way down. They never really touched back to their high of $45. $45 was the COVID high. After the drop from 16 to 40, that's a good move, but because people were thinking that inflation was going to rip. And guess what? It did rip. But costs ripped too. Remember, oil ripped too. Okay, that means that the miners, their revenues went up, but the costs went up higher, so their margins declined. So if you were in the miners, this was not a good time to be in it. Okay? Everybody thought because gold up, miners went up. Again, the gurus were wrong. Okay? The gurus who said that the price of gold was at $4,000, it got there because of the fundamental change in global geopolitics. Had nothing to do with budget deficits, the US having 120% debt to GDP, or inflation. None of that. It was central bank buying. A perpetual bid by foreign central banks under the price of gold is what drove this price higher. It's none of the rest. Maybe a little bit of the rest, maybe from 2,000 to 2,200 or 2,400 might have been, rising deficits. But really, the sustained bid in gold was China continuing to buy for weeks, and still doing so. India, Russia, diversifying out of the US dollar system. But now we're into the miners. If you were to buy the miners, remember, here is the key. Let's go back. Gold broke out to new highs in March 2024. Remember? Gold broke out in March 2024. Look at the price. Boom, and then never looked back. March 2024. What about the miners? Nope. This was March 2024. This candle right here. Not even close, because nobody believed it. Okay? The difference between here, the COVID highs, and here is that as gold was breaking out to new highs, the miners were at lows. Okay, but this is why everybody was looking at technicals and past behavior instead of looking at the fundamentals. Right here is the key for the gold miners. Okay, because the fundamentals not only changed for gold, it changed for the gold miners. It wasn't the same paradigm as it was during COVID, where they printed a shitload of money. Excuse my French. Here, there was no money printing. Nothing. The price of gold was going to 2,000, 24, 25, 3,000, with no money printing. Oil was dropping from like a stone. So here you actually had oil down, gold up. All of the inflationary factors that were decreasing the margins of gold miners flipped. Now their input costs were dropping like a stone. Oil was going down, which is the biggest input cost for all these tractors and ore and crushing all that ore. It's a very oil-driven industry in terms of costs. That is going down like a stone. So as gold was breaking up, you were having the revenues going up. Okay, in terms of price, the product that they sold was going up in price, so their sales were going up, but their costs were actually going down, so their margins were increasing from both ends. So here you had massive margin expansion in gold miners, and look at the delay. The actual breakout for miners finally happened right here in this candle, April of 2025 of this year. So only from April to now to December, which was just 8 months, and they made up the move. Okay, whereas gold was already breaking out. Okay, already breaking out. Where was gold in April when the miners broke out? Where was gold in April? Let's see here. April 2025, gold was literally September, April? Here. Gold was at 3,300. A huge, after this breakout in March from 2000, it literally had to go up 50% before the miners actually said, maybe the miners are profitable now. Okay, so the miners broke out, and then look at the catch-up move. Okay, and I want you to see the catch-up move. They broke out from 45 that we said the COVID highs all the way to 87, like almost 100% move, like 80% move, whatever. Okay, and it happened, and they're still going to go higher. This blue line here is the previous high of 85 during the 2011 pump-up job. Okay, which was QE. People thought it would be inflationary. Guess what? And gold does good during inflation. Really? I don't know. And then gold, big bear market from 2011 to 2019. Okay, so it goes to show you that the story for the miners was getting better from March 2024 to April 2025. Literally 1 year of improved margins, and then the market realized. That's why if you were a trader, you were completely missed this. If you're going for like a swing trade of like 3 months or one, this is like almost an investor type of play. But you saw it in trading, gold going up. So you wanted to be in the miners because the margins went up. It wasn't like the past. the fundamentals completely changed. So if you were operating in the past, you would say that, look, gold goes up, but miners always suck. Gold goes up, but miners always suck. Might as well just buy gold and leverage gold. You will get a better return. Not this time, because the fundamentals right now were completely different. Okay, completely different. It's not the past gold market. It's a new gold market, and you have to change with the fundamentals. And the miners ripped higher. Okay, so, excuse me, let's go back to gold. And let's go back to the daily here. Oops, missed it. The daily chart, okay. So, going back to what I was saying, the successful trades are ones that have fundamental backdrops that give huge tailwinds to your trades. And that's why back in the daily chart, look at that. Now, because you have that breakout in 2024, you could buy any breakout, and you're looking for a technical reason to get in, buy the breakouts, buy this breakout. Look at this, touched when gold was at 3,400 in April 2025. It literally took September for gold to break out again, and now you buy it. You can literally play the technical game after you have the fundamentals on your side, and you will still made a lot of money. This is why every pullback here, I bought more. Because you have the fundamentals on your side, you're so much more confident in pulling the trigger as a trader when you have the fundamentals, and then you use the technicals for the last 10, 20% as an entry point. And you want to go long. You don't want to go short. Okay, so again, fundamentals drive markets. Fundamentals are superior to technicals. When you pair the two, you have magic happening. And the number one principle of successful trade is you want to have the fundamental backdrop in your side, and then the technicals just easily play out. And that's what happened for the gold trade. And it takes years, not 1 or 2 weeks or months for these swing trading. These are the most successful trades. These are the kind of trades that completely transform your account. Okay, completely take you to the next level. $50,000 becomes $500,000. $1 million becomes 10 million. 10,000 becomes 100,000. This is how you trade. This is what you want to catch. You want to catch fundamentals. A fundamental change in an underlying market is the key to success in trading. So that's it, guys. I hope you enjoyed this. And hit me up if you like what you saw. Like and subscribe. And, of course, comment below, and I will gladly answer your comment. And thanks for listening. Have a good day, guys.